Otherwise, we'll have to keep on like moving the tablet back and forth. So camera दिखेगा ऐसे घूमते रहे. If we have two devices, it's not very fine. Abhinay, so what you'll have to do is you speak, keep the camera on, and switch off the camera, then move it to me. Okay. I'll do that.
Yes, Ameya, we are live now. We can start.
Hi, good evening all. I'm Mukti Agrawal from HDFC Mutual Fund, and today we are having a session on HDFC Defence Fund, which is a new fund offer, and it got started on 19th of May and would be ending on 30th of May. So today we have a presenter, Mr. Ameya Dewoolkar, my fellow colleague, and he's working with us in products team, and he's a product specialist of the fund. So HDFC Defence Fund is a fund with we have come up with a sector defense. So this fund will be investing in the companies which are related to defense. And defense, as in we can take example of let's say defense companies yes, Ameya will take in detail. So over to you, Ameya. Thank you.
Thanks, Mukti. Thanks for the introduction. As Mukti highlighted, we'll be touching base on the NFO which is going on, which is HDFC Defence Fund. The NFO launched on 19th of May and will run up to 30th of May. We are preponing the closure date of the NFO due to certain reasons. And before moving to the fund strategy, I'll just briefly touch base on the investment case for defense companies in India. It's actually a very unique space from an investor standpoint, because this is the first time in the Indian mutual fund industry that you have a fund which is focusing solely on defense companies. Till now, you would have seen some exposure in diversified equity funds to some of the defense companies, but a core defense fund is something which is coming for the first time. So I'm sure quite a few of you would already be interested in this particular scheme. And without much ado, I'll take you through the investment case for this fund and the space in totality as well. So as you're aware, defense itself is a key spending area for most governments across the world. India is no exception to this. Obviously, the defense spending keeps on varying as per the geopolitical scenario. During times of prolonged peace, you see defense spending plateau to an extent. During times where there is significant geopolitical volatility, like the one that we are seeing over the last year and a half, you tend to see an increased focus in defense spending. And that's something we are seeing already with the Western countries like France, Germany, Spain, Italy, which have actually increased their defense spending as a percentage of GDP for the first time in a very long time over the last year. So till last year, till the Russian invasion of Ukraine, there was a period of lull when it comes to defense spending. It's only post the Russian invasion of Ukraine that defense has seen a renewed focus from the Western countries. When it comes to the Indian context, India doesn't need actually a geopolitical event like a Russia-Ukraine conflict to get its focus back on defense. For India, defense has always been a key spending area, which is pretty understandable, right? When you have a country, when you have actually a rogue country like Pakistan on the western side, western frontier, you have not so friendly neighbors on the eastern side of it. You have a 7,500-kilometer long coastline with multiple ports and key economic centers across the coastline. So obviously, defense has always been a key spending area for the government, and that is pretty evident if you look at this particular table. So roughly, India spends between 2.5% to 3% of its GDP on defense. So obviously, you may wonder as to why the defense spending as a percentage of GDP hasn't increased if defense has been such a focus area for the government. But the point that needs to be noted here is it's as a percentage of GDP, and India's GDP has actually grown pretty decently over the last 2-3 decades. If you look at it on a nominal GDP growth basis, we have grown at roughly 13-14% on a nominal basis. So in that sense, defense spending actually growing pretty much in lockstep with the economic growth has basically meant that as a percentage of GDP, our defense spending has been largely constant. But on an absolute basis, our defense spending has grown roughly 8 times over the last 25-26 years. In contrast, China's defense spending has grown roughly 28-29 times. So that's like significantly more than that of India's, and that's primarily because the economy has grown faster than us. So that's something we expect going forward as well, when India is expected to grow at a probably at a faster rate than some of the other countries. So consequently, our defense spending as a percentage of GDP may stay the same, but on an absolute basis, we may see a significant growth in defense spending in the times to come. So that itself presents a pretty good investment case for defense companies in India. But just defense spending increasing on an absolute basis doesn't create an investment case for the Indian defense companies. That's simple to understand, because if I'm spending 100 rupees on defense and 70 rupees out of that goes to foreign defense companies, we are importing our requirements, and it doesn't really help the defense companies in India. But something has actually changed on this particular front over the last 7-8 years. So the last 7-8 years, the government has shown significant focus, has emphasized a lot on self-reliance in defense. Obviously, we have been focusing on self-reliance in multiple manufacturing industries, but defense obviously is a priority sector for the government when it comes to self-reliance. Obviously, during an hour of conflict, during a war with probably one of the neighbors, you don't want to end up running from pillar to post to say a United States or a France to fetch your defense requirements. Obviously, you can't bank on external support during times of crisis. So that's the reason government wants to focus on self-reliance in defense, and that's actually a pretty understandable objective from the government's end as well. So that actually is the key trigger for defense companies coming into the limelight over the last few years. So as you can see from this particular slide, there are four triggers or four growth drivers for defense companies in India. First is obviously the spending, which is increasing in sync with GDP growth. India's GDP growth is expected to be much better than its peers. A nominal GDP growth of roughly 12%, a real GDP growth of 7% could translate into a defense spending increase of roughly 10 to 12% on an annual basis over a prolonged period of time. A pretty good spending base if you look at it from that perspective. More importantly, our focus on import substitution. So we were the largest arms importer over the last 4 odd years, from 2018 to 22. But increasingly, we have been focusing on self-reliance. So a few years back, if you were spending say 100 rupees on defense, 50 of it was probably from domestic purchases. The remaining 50 was import spent on imports from overseas. In 2022, that changed to a large extent. Now it's a 70-30 ratio, with 70 being domestic and 30 being imports. We expect this trend of self-reliance, we expect this trend of indigenization to continue in the foreseeable future, and we probably expect in the not so distant future where we could have imports roughly between 20 to 25% and domestic purchase between 75 to 80%. So that transition from a 50-50 domestic import mix to a 80-20 domestic import mix, that itself is creating a large investment opportunity or large business case for defense companies in the Indian context. The third growth driver happens to be exports. So when we speak of any manufacturing industry, the first thing that pops up in our minds happens to be exports. Defense happens to be one of the few sectors where we are significantly languishing behind most peers. It's not that we are leading in other sectors outright, but when it comes to defense, we are lagging by a substantial margin against most peers. So in terms of total arms exports globally, India accounts for only 1% or less than 1% of total arms exports. Our market share in arms exports is roughly 1% of the world's arms trade, which is a pretty minuscule number, right? When you look at India's scale of operation, India's economic size, it's a pretty small number. Just to put into perspective, US's share in global arms exports is roughly 40%. France is roughly 15-16%. Russia, more or less similar to that. Obviously, we can't expect India to match up to those numbers pretty soon. But if you actually compare a peer like China, China is, as you're aware, not so well renowned for defense exports, but even they account for 5% of global arms exports. So at least increasing that market share in arms exports from 1% to 5%, that itself can create a decent opportunity for India's defense companies. Fourth driver happens to be the development of private vendor ecosystem in the defense space. So far, what used to happen is even when we are manufacturing aircrafts or helicopters in India, bulk of the components, roughly 35 to 40% of the components, were sourced externally from abroad. Gradually, over the last 5 odd years, that import composition in the inputs has started coming down, and that's primarily because you have many private players actually working on manufacturing small components which are actually required for the larger defense platforms. So with private players actually jumping into the defense ecosystem, right from the smallest component to the biggest defense platforms, we are actually able to cover the entire defense manufacturing ecosystem, and that's something which is pretty positive, because once private players jump into this particular space, not only is it good for the defense sector, it's also good from an investable proposition, because your investable universe keeps on widening over a period of time, and that's exactly what we want as a fund house when we're investing in this particular theme. Generally, when it comes to India's manufacturing, generally there is a perception that India's manufacturing is probably substandard. Some of the quality may not be up to the global standards, but we have highlighted a few case studies in the presentation. I would just show you one, a critical one for the sake, due to paucity of time. This is the light combat helicopter by the name of Prachand, which is domestically manufactured by India. We compare that with the American Apache helicopter, which is the gold standard in this particular category. So we compare India's light combat helicopter versus the American counterpart, and how does it stack up? So if you look at key parameters when it comes to the service ceiling, which is the height to which the helicopter can fly, the range over which it can fly, the speed at which it can fly, most of the parameters, our helicopter stacks up pretty well with the American Apache helicopter. And most importantly, we're able to price it at roughly half the American price. So that itself makes it a much more cost-efficient proposition. And more importantly, what happens is there could be quite a few countries in, say, Africa, Southeast Asia, Eastern Europe, who may not actually want to spend as extensively and as exuberantly on an American helicopter. They could probably spend or look at the Indian alternative, which is pretty much up to the mark, but selling at half the cost. So that automatically is creating quite a few export opportunities for this particular helicopter. And this is not a standalone case. So there are like quite a few cases in missiles, helicopters, aircrafts, frigates, where the indigenously or the Indian manufactured equipment is being sought by global counterparts. So there is quite a lot of interest in allied combat aircraft, which goes by the name Tejas, from, say, Egypt, Argentina, some of these countries. So it's obviously it's an industry which is at a nascent stage, but already it's creating quite a lot of noise in the positive sense in the global market. Moving on to the fund. So ultimately, this call is about the fund. HDFC Defense Fund, as it's a sectoral fund, will invest at least 80% in defense companies, which is obviously a mandate for any sectoral or thematic fund. Now, what exactly will be a defense company for the purpose of this particular fund? So any company in the listed space which has at least 10% revenue from defense and is classified as a defense, aerospace or defense or explosives or a shipbuilding industry as per AMFI industry classification, or it is part of the Nifty Defense Index, that automatically comes under the eligible universe. So it needs to have a 10% revenue from defense, and it needs to fit into the other three criteria mentioned on the screen in terms of industry classification or in terms of its presence in the benchmark index, which leads us to 21 companies at this point in time. So the investable universe at this point in time is 21, so out of which you have 2 large cap companies, 1 mid cap company, 18 small cap companies. In terms of a PSU versus private sector breakup, it's pretty even Steven. So public sector is accounting for 8 companies, private sector is accounting for 13 companies. Although the market cap weightage is skewed towards the public sector companies because those are the ones which are actually manufacturing the larger defense platforms. In terms of price to earnings ratio, the index is trading at a trailing 12 months price to earnings ratio of 27. So there could be some questions as to whether the index is expensive. The answer is no, it's not expensive. It's probably not as dirt cheap as it was probably a year ago, but it's still pretty much close to its fair value in terms of valuations. And the reason I say that is because if you look at the earnings growth of this sector, or whether the historical earnings growth or the future earnings growth, we are looking at a number somewhere between 15 to 20% on an annualized basis. And if you have a company which is trading at 20%, which is trading at 22 or 25 price to earnings ratio with earnings growth potential of say 20% CAGR, even if there is some derating in price to earnings multiple, even if the price to earnings ratio goes down purely because of the sharp or the large earnings growth potential, it will still deliver pretty good returns. So we have decent comfort in terms of valuations, primarily because of the earnings growth potential of these companies. Another interesting thing about defense companies is that they also get a lot of revenue from repairs and maintenance. So it's not like a product which is sold, once it's sold, it's done and dusted. It's not that way. So when a defense company sells an aircraft or a helicopter, it's in usage for roughly 30-40 years of time. And obviously goes without saying that during the 30-40 period year time that it's going to be in existence, it's bound to need some repair and overhaul. And that's where again the manufacturer ends up making some revenue from repairs and maintenance. A leading aircraft manufacturer in India actually gets roughly 30 to 40% of its revenue from repairs and overhaul. So that's a pretty unique situation to be in for defense companies, and it's actually a very good situation wherein over and above the order book, over and above the sales, you also end up generating revenue from repairs and maintenance of products which are already sold over the years. Which lastly brings us to the summary for investment case in this particular fund. So there are 4-5 key things that you need to bear in mind. Firstly, India, because of geopolitical positioning, defense always has been critical, will be critical going forward. Secondly, in terms of our spending, our defense spending grows in sync with the GDP growth. We expect the GDP growth to be pretty good for India. We expect the defense spending to be pretty good for India. Again, that bodes well for Indian defense companies. More importantly, there is a clear focus on self-reliance in defense companies, in defense spending. And with increasing focus on self-reliance in defense, there's bound to be a good tailwind or a good positive sentiment, a positive momentum for Indian defense companies. Fourth, the point is with respect to export potential. So we are accounting for just 1% of global exports. There is significant potential to increase our exports overseas. We are already seeing some interest on that count. And lastly, generally when you evaluate a company, you look at the revenue of a company, you look at the profitability of a company. But when it comes to defense companies, you also need to look at the order book, the impending orders that the company has. Now, most of these companies have order books which are 4 or 5 times the annual revenue. So say, for instance, a company has a revenue of 20,000 crores annually. In certain scenarios, it actually has an order book 4 times or 5 times larger than that. So the annual revenue could be 20,000 crores, order book could be 80,000, 90,000 crores. So that actually gives you a pretty good visibility in terms of future earnings, at least for the next 4, 5, 6 years. So that's the broad gist of it. On this note, I'll hand it over for the Q&As if there are already any questions in the chat box. So Khushbu, you can relay the questions if you already have any questions in the chat box.
Yes, thank you, Ameya, for letting us know the defense sector. To all the customers, if you have any questions, you can please write it down in the questions tab, or you can even raise your hands. Okay, we have one question. Where should I invest to earn short term?
So this is not really related to the defense fund, right? it's a generic question, so you can. It's probably a difficult statement to make because probably the investment existing portfolio of the investor makes needs to be considered. What's the investment horizon that needs to be considered? So, say, just a standalone question on the short-term investability doesn't uh, make a lot of sense.
Correct. We are waiting for more questions to arrive. Which specific 18 companies you are intending to invest in?
So while we cannot disclose the model portfolio, I can certainly mention a few companies which are part of the Nifty India Defense Index. So the likes of Hindustan Aeronautics, Bharat Electronics, Bharat Dynamics, Data Patterns, TCX, Cochin Shipyard, Garden Reach Shipbuilder. These are all companies which are part of the index. And it's worth noting that all these companies are pretty different in nature. So HL is into satellite launchers, helicopters, aircrafts. Then the shipbuilders obviously manufacture ships. Data patterns is into radars and defense electronics. So it's a bit, and the likes of solar industries is into manufacturing of explosives. So it's a pretty diverse uh, net of companies that we have in the investable universe. Having said that, we cannot disclose the model portfolio, the intended companies for the portfolio. So that's something we cannot disclose.
Correct. We have another question. What is the minimum and maximum amount to invest, and for how many years should we invest in this?
So you need to invest at least with a 3 to 5 year investment horizon.
And is there any specific amount?
Minimum is 100, so that's the lowest that you can go to.
Okay. What is the projected percentage return considering 5 year scenario?
So we can't comment on expected returns. That's something which is not allowed, but I can just give you a reference point to the earnings growth of these companies. So these companies have yielded roughly 17.9% CAGR earnings growth uh, over the last 4 or 5 years. Now, some of that may translate into the returns for the stock. So generally, you would expect returns above market for this kind of a fund, but with relatively higher volatility.
Is SIP available in this scheme?
Yes, it is available. So you can do invest through lump sum or through SIPs.
Okay. Then another question is there. Are these only Indian defense
The
manufacturers or
just an
also
addition
any?
there. So just an
Hmm.
addition there. So going forward, yeah. So in terms of SIPs, you can obviously do that subsequently. To begin with, during the NFO period, you can go for a lump sum investment.
Okay, good enough. We have one question. Are these only Indian defense manufacturers, or we also have any international companies like in defense space like Lockheed, etc.?
No, so we'll be investing only in the Indian defense companies.
Okay. Uh, will there be any defense experts in the fund management team to help the fund manager make the investment decisions?
So the fund manager here, Mr. Abhishek Podar, is a defense analyst to begin with. So before managing this fund, he has been the defense analyst for our other funds. In fact, the fund house over the last 4 or 5 years. Prior to this, as well at Kotak Institutional Equities, he's managed. He's been covering defense companies as part of his coverage universe. So we're actually not picking a diversified fund manager. We are actually you. Deploying the defense analyst, the core specialized defense analyst as a fund manager for this fund.
Okay, and for SIP investment, what is the minimum and maximum per month? investment required?
So with respect to SIPs, there could be a possible addendum which could be out in the next few days. So till that time, it won't make color. So it would be just like any other diversified scheme to begin with, but it's better that you wait for the addendum in the next couple of days. There could be a
Okay.
notification along these lines once the NFO is closed.
Then which other funds has this fund manager managed earlier?
So he's a core defense analyst. This is
Hmm.
the only defense fund in our stable. In fact, this is the only defense fund in the industry. So he'll be managing this fund for the first time. So he's been a core defense analyst. Some of his picks in the defense sector have actually contributed to substantial returns to some of the other diversified funds that we have. In fact, we have defense exposure across various diversified schemes, and he has been instrumental in our selection of those stocks in those funds. So as an analyst, he has a pretty good track record. As a fund manager, this will be his first fund that he'll be managing.
Is this a pre-closing NFO? When are you closing this IPO?
We'll be
NFO or
closing the
IPO?
NFO on 30th May, next Tuesday.
30th May. Okay. Is this a pre-closing date?
Yeah, it's pre-closing. Previously, it
Okay.
was supposed to close on 2nd of June. Now we are closing it on 30th of May because of the good response that we had in terms of
Hmm.
liquidity management. It's much more desirable to uh, uh, collect the right sum and invest it appropriately. So in that sense, we don't want to wait till the 2nd of June. We'll close it around 30th of May.
Okay. Can we comment on what would be the expected size of this fund in next 12 months?
No, the fund size is something which we cannot comment on to begin with. The NFO size is something which we cannot comment on. The eventual size after 12 months is again a function of the opening fund size and the incremental flows over the next 12 months. So it's something which cannot be forecasted, or rather something which forecasting it is going to be a pretty tricky proposition.
Okay, and there is one last question. What would you advise? Recommending in lump sum or in SIP?
So for now, you can go for lump sum. So somewhere down the line, you can probably complement that with SIPs. The reason I say that is generally in a sectoral fund, you need to time your entry and exit in that theme and scheme in other core sectors. So in that sense, lump sum makes a lot more sense in other thematic or sectoral fund because you need to time your entry and exit appropriately. Here, this is more of a multi-decadal investment opportunity. It's a sector which is at the nascent stage, at an early stage, expected to grow over the next 10, 15, 20 years. So in that sense, there is no right time or wrong time to invest in this scheme. So you can have lump sum to begin with and then complement that with chips.
Okay. One more last question. When can we start investing and is it an open-ended fund?
It is an open-ended scheme.
Okay. And when can we start investing in this fund?
So right now the NFO is already on since last Friday. It goes on till next Tuesday, so you can invest. Yeah.
Okay. Yes, we have all the questions answered. Would you give any closing remarks for this session, Amaya?
Yeah, so just a few things. So it's as I said earlier, it's a multi-decadal investment opportunity. You don't need to worry about timing your entry and exit in this particular sector or theme, unlike some of the other sectors. Secondly, it's always going to be a core priority spending area for the government. So government cannot probably think along the lines of, okay, this is probably a bad year fiscally, we'll spend low on defense, or this is a good year, we'll spend more on defense. Defense spending is always bound to grow in a steady manner, which is actually a very good thing for defense companies. Defense is always going to be up the priority list for governments, and with the kind of the enthusiasm, the attractiveness of this space for private players that we have seen in the recent past, you're bound to see the universe widening. So at this point in time, you have roughly 21 companies. 2 years back, the number of companies was barely 15 or 16. So even in a span of 2 years, that number has gone from 15 to 21, the investable universe. That is expected to expand over the next few years. So even in terms of investable universe, we'll probably see an expansion in the times to come. So it's pretty interesting theme, pretty interesting time to invest in. And this is something which you can certainly consider as a tactical component of your portfolio. So that's probably the gist of it.
Hi, Khushbu.
Yes, thank
Mukti here.
you. Yes.
So I would just like to tell everyone that you can consider investing. It is the minimum amount of investment is only 100 rupees. So during the NFO period, you can invest in lump sum, and after the NFO, when it gets reopened, then you can start with SIPs. So happy investing, and we can close the session.
Yes, thank you, Ameya, and thank you to the customers for joining the webinar.
Thank you.
Thank you.
It was great attending the same. Thank you.